VIRI showing that strength that we were talking about a few days ago, right? Let's go ahead and see what could be happening for the following days. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a VIRI technicals, raw price action, and statistical thread of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so we are looking at VIRI on the bi-daily chart here, and you can see here that I have actually taken a back test that involves volatility represented by this indicator BBWP versus momentum represented by StochMo or stochastic momentum in the TradingView software platform. Okay, so I want you to notice here that out of the entire trading history on the bi-daily chart, we have noticed 5 iterations of which where volatility has reached the critical volatility zone of contraction, followed by an expansion phase paired with momentum with an upside pivot. I have taken note of 5 iterations, of which 3 were guessed correctly to the upside, giving us a 60% upside accuracy with a 50.03% upside thrust over the span of about 10 days. Okay, so the signal absolutely has fired. We're still moving along very nicely. And if we were to actually just put down where we would be taken based off of the firing of that signal, well, that actually would change, and it would actually be upon the opening of this candle here. So let's just go ahead and see what that percentage can be, right? So let's take a measurement box like this, take into consideration the opening of this candle here to the range high thus far, and see what we have made. Okay, so please notice here that we have already made 91.55% to the upside based on a 50% accuracy. This target is probably laying near the upper end of a first standard deviation. Okay, so this is why we have variance. The smallest move could possibly be around 8 to 12%. Based on the lower end of a first standard deviation. Okay, you guys, so that price action has in fact already met, and it's still suggesting, very curiously enough, still suggesting a continuation to the upside. And why is that? Well, I actually explained to you just a few sessions ago that historically speaking, we have no price action here. We only have one ridiculous candle just kind of capitulating, right? So usually when that happens, you have sometimes, and very rarely, you have situations like what happened with CXAI. Before it made that move, I suggested a potential 500% move to the upside, of which was way short, apparently. 500% was from or 460%, whatever that was, right? It was from $1.60 to about $8 or over $8. It in fact reached $69. So not sure how that worked, but it actually did, right? So that's kind of like what we're facing here, okay? And this is why I was stating that there is a higher probability upside for it. Please notice here that on the 5-day volatility versus momentum backtest, we have also noticed 5 iterations, of which 5 were guessed correctly to the upside. And guess what? We are creating the 6th one. Now, still maintaining a 100% upside accuracy. At one point or another, it's going to invalidate you guys. So please notice that we have an average upside thrust of 64.76% to the upside. Okay, so this was from the current price action that it would take us to around $1.12. But I mean, just the thing is that I have nothing else to kind of validate that resistance zone. I guess we can take a Fibonacci ratio, right, from the range high to the range low, and we can see if that actually takes us somewhere. Well, it takes us just upside of the 2 fib, right under the 2.272 is very likely for it to be. We can actually take into consideration the current 5-day range, right, and we can see where it takes us there. Well, that would be a lot better. Please notice that it's taking us directly to $1.12 where the 3.618 mean is located. I would personally like to have, I mean, the signal technically is fired because we do have volatility within the critical zone of 90 percentile. I would really like for the moving average to also have been in there, but in all technicalities, this is the firing of the signal, and we have suggested a continuation to the upside. Now, if the firing of the signal already happened, then we can actually take a different measurement because it would be very likely right when we actually touch this zone here. So if we touch that zone there, then that means that we can actually start taking the measurement from the opening of this candle. So the opening of this candle you can actually see right up here, right on the O for opening. We hover right above it and it says 60 cents, right? So let's go ahead and remove this thing over here and let's apply the 60-cent metric to this, which is right at about there, and apply a 64.76% move to the upside. We'll get as close as we can. It may not actually do it all the way perfect, but that's okay right there. 64.23 is taking us now to the 2.618 at 97.74, almost exactly. Okay, so very, very curious that we are facing some geometrical targets here in confluence, right? So another thing that we should notice here is that we are riding in a right-angled broadening ascending wedge, of which we have some upside signals already faced. First of all, we do have the silver cross, which is the 20 exponential moving average crossing above the 50 exponential moving average, breaking upside of the formation itself. And of course, when we break upside of that formation, we must come back to validate the current or the newly converted resistance into support. Where is that target located exactly? Well, it's possible that we can actually come back down to the range of a few targets, 61.98, 56.91, and the bottom side of the formation itself, which could be located at about 55.38. Okay, so 55.38 could be a very nice potential loading zone, not financial advice whatsoever. Please remember that these are just mathematical probabilities, statistical probabilities, and they do not reflect my opinion whatsoever. Okay, you guys. So please notice that this could be a very cool loading zone for that statistical upside. Okay, so if we are able to gain price objective via the formation itself, then we take a trend line from the top of the formation, from the breakout point, which could be right at about here, all the way to the bottom side of the formation, apply it to the breakout point, and you can see that it takes us to about $1.59. I am not saying that we are going to $1.59. I'm just saying that that is how the playbook states that you should trade or gain a price objective with, that's actually just coming up with a psychological component. My obvious preference here is to make sure that I have confluence between mathematical probabilities and psychological components. Okay, so this does not meet the psychological component, but mathematically speaking, we have the 200-day simple moving average located very near that 191 level at the 4.236. It also has some confluence here with the psychological component upside or the price objective. So there is a possibility there, but that's a possibility. It's a potential, right? So I would rather the statistics give us the answers. Now, referring to the RSI, we can have a very limited upside here on the 30-minute, followed by a downside continuation. Okay, so now yes, right here we have a tiny little pivot point. You know, I do not trust these little pivot points. Very likely for it to continue to the downside. The 12-hour is giving the validation for a continue to the downside, or a continuation to the downside. It looks like, let's see, let me go to the daily. The daily is in fact giving us a continuation to the downside, and now the buy daily as well. But please notice something here. The daily is facing a support range right at the 14-day simple moving average, and it looks like the buy daily is facing a support range at the gravitational zone of the bull strength percentile. Very likely for us to find a bounce from that 14-day simple, continue on to the upside, thus giving us validity to these downside targets that we just spoke about, right? You guys, please remember, first and foremost, I'm not a financial advisor. Again, remember, guys, that I still have about 9 or 10 seats left on the ArcMasters trading course. Please find the email in the description below for you to join and get enrolled. Send me an email and we'll go over the price, okay, you guys? But with, so please remember, I'm not a financial advisor. Remember that, okay? I cannot suggest for you to buy or sell any assets whatsoever or hold it, okay? So just do your own due diligence and everything will be okay, all right, you guys? But with that said, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios.